Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing and your life. I'm your host, Tracey Ryniec, and this week I'm trying to aim for the positive. I'm going solo to talk about stocks that are trading near their 52-week highs, not the lows. What is in this list of companies that are trading that close to 52-week highs and hopefully are in the green here for 2025? I ran a simple screen on Zacks.com in the stock screener, and I just looked for stocks that were trading within 5% of their 52-week high. So that doesn't mean they're at their all-time highs, but we'll just take the 52-week right now here in 2025, given the tough market conditions. So what did I get when I screened for this? I didn't put any Zacks rank on. I didn't put anything else on, just stocks near their 52-week high. And surprisingly, I got 282 stocks. That was quite a big number. Now, because I didn't have the Zacks rank, it does mean we will get some stocks that have no rank at all. And I'm going to talk about one because I did pick it out of the list and then I discovered it had no Zacks rank. But they're all market cap sizes. And interesting on this list, there were a dozen or more of the gold miners, not surprising there. And I'm going to cover one of them. And there were a lot of consumer product companies and then, surprise, surprise, foreign stocks. So foreign banks, foreign railroads. I'm going to talk about one of those today. And that's kind of a sign of things we have been hearing out there with some investors abandoning U.S. assets. So they're going into the gold because they don't want to buy the bonds or the dollar. And they're going into foreign companies now. Those are looking more attractive instead of U.S., like the Mag 7s or anything else on the S&P 500 for the most part. So I picked out three main stocks to talk about, but then I slid in two others because they're well-known companies that all of you know. And I just wanted to take a look at those charts as well. So 5 stocks trading near their 52-week highs here in 2025. This is an interesting group. So let's start in. So the first one is a bank, but not a foreign one. I was surprised to see that there were some smaller community banks on this list because while the underlying business is looking pretty good with them, there's some question now if we go into recession, what might happen? And if the housing market doesn't recover, the mortgage business is still suffering, even though that's been suffering for 3 years. Everyone was expecting it to turn around, but looks like it may not here in 2025. It may be delayed a bit. Eventually it will, and then that will go to earnings as well. But these smaller banks really are very community oriented, regular community lending, deposits, and then mortgages, big parts of their business. So this bank is Ohio Valley Bank. I've never covered it before. It is very small. They have 17 offices in Ohio and West Virginia. And they also run Loan Central with 6 consumer finance offices. Now, the shares were spiking so much recently, I thought maybe they were getting acquired. That was the case with some of the companies on this list in this screen. They're getting bought out. The shares have spiked. That's why they're trading near the highs. But I don't believe that that's the case. I haven't seen anything that is showing that the shares were spiking, so, because of a buyout or anything. But they did just raise their dividend. So that is an important part of it too, I think. But even still, dividend went up to 23 cents a share. It is yielding 2.4% now. Would have been a little higher before this recent spike in the shares. Year to date, these shares are up 60%, and they have broken out of the several year channel. Now, those of you who've listened to my podcasts or even checked out the Zacks Confidential that I have written here, which is our weekly confidential ideas, I have talked about the banks. I believe that the banks are due for some kind of rebound eventually, right? It's been 17 years since the bank implosion, and they will turn it around. The earnings have already started to turn it around, and they are cheap. But this one is breaking out a little bit ahead of what everyone else is doing. They've mostly been trading in the narrow trading range, and now are not. So Ohio Valley Bank has no Zacks rank. It looks like we maybe lost an analyst on it 2 years ago, but just showing my screen now, this chart is still available. And you can see it was just in this range through the pandemic, through the last couple of years, traded down significantly in 2024, and then boom, here in 2025. Only 183 million market cap, and there's the dividend. They just announced the increase, so we haven't increased it on our page yet, but it is now at 92 cents for the year, and it is yielding 2.37% now. So it's an interesting little play. I decided to talk about it even without the Zacks rank and without knowing exactly what's happening with the earnings, because we don't have the analyst coverage on it. But the banks are an area to watch. And with this one, and given that it's a small cap, I'd probably be cautious in entering here just to see if there's any further pullback here. And it's not as if the dividend yield is, 5 or 6 or 7%. Where I might want to dive in just to get that yield. So this is Ohio Valley Bank. The ticker is O, V as in Victor, B as in boy, C as in Charles. OVBC, Ohio Valley Bank. Okay, let's switch to the next stock. And this one is also one that definitely I don't believe is on most people's radar, because this is the first time I've ever covered it on any podcast, and I've been doing these for 9 years now. So it's West Japan Railway. Ticker is, and this is a 5-letter ticker, W, J as in John, R as in Robert, Y, Y. WJRYY. And it does have a Zacks rank. It's a number 1 rank. And got the style scores. So we do have analyst coverage on it, but only for the full year. As you scroll down here, we don't even have the chart is not available on the price consensus and surprise, but we can take a look over at the interactive, and it'll show us exactly what's going on over here. I'm going to put the line in, and you can see year to date, it's pretty hot. So year to date, shares are up 27.4%. They are a railroad. They also own real estate. It looks like they're building like towns near some of their stations, actual towns and hotels. They have, it looks like maybe some shopping, convenience stores like 7-Elevens and things, coffee shops. They have a market cap of 10.5 billion, so they are a large cap. They also pay a dividend of 51 cents, yielding 2.3%. And it looks like the last dividend payout was last year. So as a foreign company, they may only pay it out once a year. Don't quote me on that, but that's what I'm assuming. And again, the shares looking pretty hot here. But if we look at the 5-year chart, they're not anywhere close to what was happening in 2020 or 2021. Big sell-off heading into 2022, and then mainly been moving sideways until now. And now we've got the 52-week high here, but you can see it's really testing that level from even 2023 and 2024. And we'll see if we can get a real breakout here. But these types of companies, foreign, large cap, dividend paying, stable businesses, are looking a little more attractive here in 2025, as we've seen even with Warren Buffett, who's been investing over in Japan for quite some time. But these types of companies, they're out there. This one does trade on the OTC, so it's not on the main markets here, New York Stock Exchange or the NASDAQ, but easily accessible and interesting, these types of plays. So that's West Japan Railway, WJRYY, year to date up 27.4%. Okay, then I wanted to look at one of the gold stocks. So there were a dozen, as I mentioned, and not surprising, gold at new all-time highs. It did hit 3,500. It has pulled back off of that. It's a little too hot for me at the moment. I would want it to pull back a little bit because it was going a little bit too speculative for me here in April of 2025, but it is in a multi-year bull market now. And so it's going to have these spurts, and it's in the middle of one. Now, that also means, but not always, but usually the gold miners follow along. And right now, the gold miners are. So the one I chose, Kinross Gold, ticker K, as in Kathy, G as in George, C as in Charles. KGC is the ticker. It's a Zacks number 3 right now, has not reported earnings yet, will report on May 6th. Its style scores are pretty good. B for value, A for growth, C for momentum, A overall. And then scrolling down, price, consensus, and surprise. You can see these earnings now up and to the right very strongly because of the price of gold. They are unhedged. Almost all the gold miners are. I haven't run across one that isn't so far in looking at these, but Kinross is one that is unhedged. And what does unhedged mean? Some of you might not be familiar with the lingo of the commodities trade, and that just means they did not buy contracts to protect themselves if gold goes too low. It means they can buy the range that they're going to get when they sell the gold. But in times like this, when you have a very bullish gold price, you don't want to buy those contracts. You want to let it run because every quarter you're getting a higher price for your product, for your gold. So the average realized gold price for Kinross in the fourth quarter of last year, which is the last quarter we have for now till they report again, was $2,663. A year ago in the fourth quarter 2023, it was $1,974. Now their all-in cost is for the fourth quarter was $1,500 an ounce. So you can see now that it's gone up to 2663, all in is at 1,500. And right now we are above 3,000, but we mainly went above 3,000 in the start of the second quarter now. So they're not going to get that for Q1, but they could see 27, 28 average realized. We're about to find out. But that's almost double still what their all-in sustained cost is. So you can imagine free cash flows on all these gold miners are jumping, and they're incredible right now. And for these gold miners who have been waiting 45 years to get this level of gold prices, inflation adjusted, they're waiting since 1980, then now is the time to do something with this money. So a lot of them are paying down debt, which they should be. It's very debt intensive industry. You are mining. You have to have the equipment. You have to pay the employees. You have, maintenance on the equipment. You have to get the gold out of the ground, and that's expensive. So they are using it to pay off some debt. So Kinross, free cash flow for the fourth quarter and for the full year was at a record high. Fourth quarter was $434.4 million. That's up did I write it down? I might not have written it down. We'll go to the year. For the year, also a record 1.3 billion for the year. And that is up from 559 million in 2023. So suddenly it's more than doubled. You're going to look for similar numbers if it stays at these levels, even anything over 3,000. If it stays there for the rest of this year, we're going to see quite nice free cash flow. Now, they have paid off a lot of debt. They repaid 800 million of debt in 2024. And on February 10th of this year, 2025, they repaid the remaining balance of its term loan, which was another $200 million. So they've repaid $1 billion in debt now, and they have said that debt is their main focus. Some companies, maybe not as heavily into the debt, so they can focus the money onto the shareholders. Kinross focusing a little bit more onto the debt for now. But they finished up the year of 2024 with cash on hand of 611 million still. Now, they are paying a dividend, but it's just 3 cents a share. So that yield is just 0.8%. So not even a percent. They also did say that in the fourth quarter that they were hoping to restart share buybacks later in 2025. So we might get some share buybacks. Unclear on the dividend if they're going to pay a special, but with cash at this level, some of these companies are paying a base and then they're allocating a certain amount to a variable dividend. So we'll see with Kinross. Kinross is Canadian. They have operations in the US, Brazil, Mauritania, Chile, and Canada. And then they have a market cap of 18 billion. So they're not one of the small junior miners. They are one of the big guys. And so we will see what happens. These stocks, again, not surprising where it's going because of gold. The forward PE on Kinross is just 16. And they have a PEG ratio of 0.7. So all of that is looking good. And then just looking at the sales and EPS growth rate chart, which is very nice on the quote page on Zacks.com, you can see in 2024, earnings were up 54%. That's when gold really started to run. And then 2025, expecting another 35%. But this is before it busted out to 3,500. And then 2026, nobody's thinking really that far in advance, but it's showing 5.4% earnings growth. It's going to be real hard to top this year's earnings with gold at these levels. Now, remember, with any of these gold miners, execution is top of the game. Can they get the gold out of the mines? Are they having issues at any of their mines? Are the gold mines heading towards the end of their lifespan? Are they going to have to buy someone out to get some more gold? Like, these are all issues with the gold miners, which is why they don't always move in conjunction with the actual underlying gold price. But if you're looking around for companies that are winners here in 2025, the gold miners are going to be, and they've got these free cash flows. So you might want to take a look at the list of the other gold miners to see which ones maybe are a little more shareholder friendly, not paying down as much debt right now to maybe get these bigger dividends that are going to be coming. In 2022, when the price of oil surged, the oil companies were mostly unhedged, and some of them started between the base and the variable dividends and even share buybacks were yielding to shareholders in the double digits. And the old Pioneer Natural Resources, which was acquired by Exxon, was yielding 18% at one point. So we're not there yet with these gold miners. They're kind of just living it up with the fruits of their labor after waiting 45 years. So it's good to see them paying down some of the debt. The oil companies also did at that time when they had tremendous free cash flows as well. But it does come to an end in commodities often, and it did in oil. And so it will eventually in gold, but we seem to be in the early stages here of a nice gold bull rally. And so check out some of these gold miners. This one is Kinross. It is Canadian. So maybe you get a little bit more stability there with the Canadian company. Ticker is KGC. Now, what about those stocks I was mentioning that I said you'd be familiar with? Because you would be. So the first one is Philip Morris International, ticker PM. Yes, it's the tobacco company. I know some of you are like, no way, I'm not doing the tobacco. I get it. Probably the same even with the gold miners and also with oil. But it is trading at new 5-year highs. I just put up this price consensus and surprise. The ticker is P as in Paul, M as in Mary, PM. And you can see up and to the right with the earnings, some nice earnings surprises, just one miss in the last 5 years. And they have a huge market cap, $252 billion. They do pay the dividend. It's $5.40 or yielding 3.3%, even with the stock at new highs. Year to date, it's up 35.7%, maybe because people think you need this product and you can't trade down anywhere, even if it's tariffed. But this is a global company, so they've got to have operations in numerous countries. And 40% of their products are actually smoke-free now. They are still tobacco related, but smoke-free for 40% of the revenue in 2024. So I guess it shouldn't, 40% of revenue from their products is smoke-free. So Philip Morris, I was thinking back, like, didn't they change their name? And they did. That would be Altria. Remember them, ticker MO. But many years ago, they actually split off the international division of Philip Morris. So we did end up with two companies, Philip Morris and Altria, which was regular Philip Morris, changed its name in 2003 to Altria. And I took a look at that one. It's year to date. It's up 12.2%. Dividend is yielding a little bit over 7.1% over there with that dividend yield. So both of these always have been strong dividend payers. So again, if you're looking for some income, plus now you're getting the breakout in the stocks. And what is Philip Morris? Let me just see. How expensive is it? Well, 22 times. It's not cheap with a PEG ratio of 2.75. And it's reporting earnings this week while I'm reporting this. So when you listen to this, they'll already have reported earnings. So check in on that. Sales and EPS growth rates, still expecting 10% here in 2025 and 11% in 2026. Just kind of consistent business as people still want tobacco products, and Philip Morris has been doing it for a while. Okay, so that's Philip Morris. The other one you would know is Kroger, the supermarket chain. Everybody's piling into this one as well. Year to date, up 17.6%. You can see it's a Zacks number 2. It's got a BVGM score. And then look at this chart, price consensus and surprise chart. Hasn't missed in 5 years, so it's an earnings all-star. And up and to the right a bit here, certainly for 2026, I like seeing that. Market cap of $47 billion, so this is a big company as well. Does pay a dividend, yielding just 1.7%. But we have a true 5-year breakout going on here, not just here in 2025. Scrolling down to see the sales and EPS growth rates, just 6% expected here. They are in the fiscal year. It looks like fiscal 2026, 6%, and then 8.7% for 27. The grocery store chains have never been like super huge growers, but last year actually declined 6.1. 2024, though, 12.5 in that fiscal year, it did grow. So forward PE now is 15. So not super expensive, but the stock has been cheaper over the years. So it's a little stretch to me, but after going nowhere for 22, 23, then it started going up in 24, and now we finally have the breakout here in 25. So who would have known? Mag 7 down big with double-digit declines in the Mag 7s, but we've got a grocery store chain up 17.6% year to date with Kroger, ticker KR, R as in Robert, KR for that one. So you can see the mix is quite interesting on what stocks are near their 52-week high. Not all of them are at 5-year highs, but many of these are. And they have momentum, upward momentum, which is rare given the very bearish market conditions. So do a deep dive on some of these stocks. Some simply do have just the momentum on their side. Some will have this great earnings growth and these free cash flow breakouts, which is happening in the gold miners. Some may not be long-term trades like the gold miners, but others may be. And then keep the banks on your radar, not just the smaller community banks like Ohio Valley, but the bigger regional banks and even the big international banks. But some of them had nice rallies over the last year, and they pulled back off those highs. But the regionals and the community banks haven't really broken out yet, and certainly not from the 17-year bear market they've been in. And earnings looking a little bit better in those banks now, and you might get a decent dividend yield, even better than Ohio Valley Bank. I have seen 4, 5, and even 6% with some of the bigger community banks. But we'll see. Going into a recession, usually banks aren't the place you want to be. So be cautious on that aspect of it. But for now, earnings holding up, even in these challenging market conditions, as Ohio Valley Bank said when it raised its dividend. Yes, it is still challenging out there for them. So let me recap the tickers again. We had Ohio Valley Bank, OVBC. O, V as in Victor, B as in boy, C as in Charles. We had West Japan Railway. If you just want to hang out and hide out in Japan and get a decent dividend, this might be a play. WJRYY. It's got 5 letters. WJRYY. Then we chose Kinross Gold for the gold miner, KGC, and we're going to get earnings and we're going to see what's really going on there with those free cash flows for all of these miners. So tune in for that. Then we had Philip Morris, ticker PM, P as in Paul, M as in Mary. And we talked about Kroger, ticker KR for Kroger. And as always, I'm aiming to find out what is going on out there in the stock market, where you can find some of these good momentum plays. I've covered stocks on sale. I've covered the tech stocks several times now. And I will be taking another look at the Mag 7 because they remain weak. And there could be some deals there maybe after the earnings reports come out, which we are now getting. So be sure to subscribe. Get us on YouTube at Zacks.com/YouTube. Get us on Apple Podcasts. We're on Spotify. We're on Amazon Music. We're anywhere you can get podcasts these days. Watch the video podcast if you get a chance, but be sure to listen or watch. And I'll be back next week with some more stocks.